I would like to just kind of start out with you explaining how people can determine the limits or what sort of coverage limits they might need. Let's say we talked about this house in Chesterfield, and I think that house is going to sell for about $950,000. So does that mean you need homeowners insurance for $950,000? How does that work?
Not really. So what happens is most of these insurance companies, in fact, all of them do, they have a part of their rating program involves input of key statistical data, the square footage, the type of construction, is it brick?
Specific to the house, you're saying.
Specific to that exact house. And a lot of times, these companies now start to pull it from the assessor's site. So it already pre-fills a lot of the information.
Because the database is much more complete than it was 10, 15 years ago.
Extremely. Yeah.
Right.
So you still have to rely on your agent to kind of fill in the blanks. You know, obviously the assessors don't know what kind of flooring you might have, or are they granite countertops, or is the basement finished? And so that's where your agent comes into play to be able to make sure that information is all accurate and up to date, so that that number that it comes up with as far as a replacement value. So
because the insurance coverage, if your house burns to the ground and everything in it burns, obviously if you paid $950 yesterday and it burns tomorrow, you know, the value of the whole property was $950. But you're talking about market value. Right.
So what the insurance company has to be concerned with is rebuilding value.
Right, replacement cost.
Exactly. So oftentimes, in fact, most of the time, the replacement value is going to be higher than the market value.
So that's interesting. And the reason is because costs of building goes up all the time.
So
but market price goes up and down.
Yeah.
Materials.
So think about it this way. I mean, when a subdivision goes up in your neighborhood, okay, there's going to be a couple hundred to 1,000 homes in that subdivision.
Right.
They're building the same exact floor model 10, 15, 100 times.
Right.
Well, guess what? When your home burns, a custom builder has to come in. He's probably never built that specific home before, and he has to start from scratch.
And he doesn't have the efficiencies of scale that your builder did,
exactly.
Right?
So everybody's doing it for the first time. But what most people don't realize is that you also have a cost to, assuming it's a total loss, they've got to bring in a bulldozer, okay? Bulldoze down what's there.
Removal.
They've got to haul it all away in dump trucks, pay to have it dumped. The last total loss that I had, the removal cost was $20,000. So you have to add that to the replacement value.
That's huge. And the other thing that you really have to consider is the cost of the land, because your house burns down. Obviously, the land doesn't burn down or go away. So some portion of it, typically it's 20 to 25% of your home value is tied up in the land itself. So you're going to adjust downwards for that, but then upwards for current construction costs.
Most of the time, the current construction cost is greater than the savings of the value of the land. It just works out that way.
Right.
And part of that is the insurance companies, quite honestly, being protective.
Right.
You know?
But you're gonna determine this value based on the physical attributes of the house itself.
Exactly.
And you're going to assign some sort of a metric to create a number of what it would cost to replace that. But on top of that, you've also got contents. Right? And in the real world, we don't talk about contents, but that's the insurance phrase that you guys, that's your stuff, right? Your personal property. So how does that figure into your values?
So most companies automatically give you as between 50 and 75% of whatever the dwelling's insured for. They give you that amount of contents coverage. So that's already kind of a predetermined number. The bigger key, though, is